All right, homies. Uh, I'm back after some time trying to make all these videos for you guys. Should have made some. I actually made some like videos and contents before the head rate hikes and sorry, not the rate hike, the CPI numbers and everything from over the weekend. And I was kind of like, let's say, didn't get any sleep and was out doing things. So it didn't look good or sound good. Yeah, I didn't post it, but now I wish I did because I kind of went over some of the things that happened in the market today. Uh, today's what's the day today? Wednesday. Yeah, 13th of July. So anyway, so I just want to do a quick video on oil because while things are happening in the regular market, I just wanted to kind of posit why where oil I think is headed, right? And where I think that oil long term its potentiality of its pricing, which way it might move. And so basically, I'll just say that I mean, obviously, oil has been going up and like going punching through the sky, especially since the whole Russian you know uh, kind of intervention into Ukraine. And since then, it's obviously due to that reason, there's been a massive kind of like a breakage in the supply chains in essentially the way that oil gets routed. And so instead of like the efficient supply routes, now it's kind of like we have a more inefficient supply routes, right? So instead of Europe buying, let's say, oil, or other people buying oil like straight through Russia, due to the sanctions and all that, they'll be buying it through some other like proxy country, and the other proxy country will just put a premium on the on the same oil they're buying cheaper from Russia. Let's say like India, that's what they've been doing, and they're making quite a bit on and getting a big cut of that price. And so essentially, let's say if you're Europe, you're buying more expensive gas, more expensive energy, because instead of getting it from the more if price efficient route, you're buying it from other people, right? So there's like a huge musical chair that's happening. So and obviously, anytime you have geopolitical kind of flare-ups, this kind of stuff definitely is important because they, you know, cause price spikes, or sometimes price to like just collapse. So basically, that's obviously that's kind of the trigger. Now, even before then, there were many reasons. Remember, oil was still just going on up, right? There were quite a few reasons why this was happening, and that if you remember that Biden administration and the Democrats have been gung ho about um, switching away from oil. Like basically I mean, Biden being the type of man he is, being whatever 80 or 90 or whatever, and just saying out loud what should be, been in his head, kept quiet about it, right? So how many times has he said that he wants to bury the energy industry? And I'm not, I'm kind of like a bleeding heart eco. Well, I'm not a bleeding heart, but I'm definitely someone who's like eco-friendly, let's say, right? I don't necessarily think that using oil is good, but for the time being, what other option do you have to kind of run the economy, right? This is the most efficient way, energy that's out there at, based on the infrastructure that we have, the whole world being kind of built on it, right? So this was this spike, all these things have been like easily projected, right? And already there was problem with anxiety and things like that with the supply of oil overseas and all across the world. So as far as technically speaking, the thing with oil is you can clearly see that there's quite a bit of like lead up right around this like $90 level or so, and then it shot up, right? It just moved up. There's clearly, this is like the area of um, like a price zone, right? Somewhere in here, right? So this is where price has been moving a lot. This is basically somewhere in here is like the point of control, which is to say where prices have been moving about the most. Now, what's interesting about the price right now is that right about 95, 90, well, it's about 92, 93, something like that, right? Right about there is like you can see multiple touches to the downside. And so what we're facing here is that thereabouts right there. So, but let's just say 92 and a half, okay? And then we have the next one up down is 86.99 or so. So right about there, those are the like the two levels to take a look at. 92 has been a pretty good solid level, and let's see if it holds there. Now, why, in the short term, we might have a downturn in oil, but I do think, kind of switching on to the main topic, that oil is a long-term buy or it's a bullish market. And there's many different reasons because um, there has been a lot of like dislocations, right? Geopolitical, with COVID, all these kind of things that has happened. Essentially, what has happened is momentarily due to all this dislocation that uh, economic activity and like expansion of different markets hasn't happened. However, though, this is not permanent. At some point, we will have an equilibrium where we go back and we get back to our normal level of economic like expansion, right? And especially right now, given that all the central banks in the world are fighting. Um, they're fighting inflation. That they're basically hiking up the interest rates, right? And which causes a downward momentum to economic activity and the markets in general. And so we would expect right now oil to go down. However, again, this is not the permanent situation. Now, understand that even in spite of that, like the new normal, we're speaking of oil is like $90, right? I mean, like a couple of years ago it was like 50, 60, right? Even that is huge, right? Like nobody's talking about the fact that we are at 90 and this is gonna be like this is even if it's in the 90, let's say that's at like let's say the before it was like 85, 87, something like that. Whatever the number is, that is if that is a new normal. Apparently we don't have inflation, but I'm sorry, we do have inflation. Obviously, the Fed is now admitting that we have inflation, hence their actions. But oil, it's not. This is uh, this is like the new normal, right? So in other words, that already it's an elevated stage relative to where it has been in the past. Okay, so that's one. Now, so as the whole world kind of, let's say in a year or two, we kind of put these inflation things behind, and the rest of the world kind of goes along and kind of expands again, and the whole Ukraine situation will probably be wrapped up. And even if not wrapped up, what's going to happen is that the world will find an equilibrium where some of the supply chains, some of um, the value chains will be like more streamlined. They'll be more efficient, right? So what would that imply is that essentially economic activity should come back and rebound. Right now, also China is going through like intermittent kind of like lockdowns. So those kind of things also should be behind. So that's some of the one reason why. Now, underlying the oil problem in America is the refineries because the our due to again the kind of like anti-oil, I don't want to say agenda, but bias of um, the ruling class, in America, there has been a massive underinvestment into like both finding reserves of oil and to exploit them, and more importantly to for refinery capacity, right? And so right now we're running at 97% refinery capacity. Um, I mean, there's not a lot. That's literally it. I mean, there's no like excess capacity anymore, right? So, and this is with basically having we have essentially a recessionary environment, right? Um, and so even with that, we're almost like full capacity on our refineries, which means that essentially our the oil that this puts obviously a upward spike, upward momentum to oil, right? And so what happens is due to the long time that we have um, been working with, where essentially people have not been investing into oil fields or oil production or oil refinery capacity. That is the main underlying reason why all this time that oil has been going up before this geopolitical problem, flare up in Ukraine. So, and that's not going to go away tomorrow. And if Biden or the Democrats or whatever, they keep on saying we have to do X, Y, Z, these things take like half a decade to, get going, to make it happen, right? And most of the companies, the industry is basically saying that, yeah, we can do like 3% capacity next year, but but that's not enough. That's the whole problem there. That is not simply not enough to uh, jack up or to increase supply of oil and help us with the supply problem. Now, this again is a problem overseas because since the supply chain's all messed up, people's need for oil hasn't gone away. It's just that everything is kind of like in limbo, right? Um, and so with U.S. production not being as high as should be or could be, this is driving up prices everywhere and prices at home. Okay, so that's really the kind of like underlying reason why this beyond like the international stuff, why oil was already kind of going higher and higher and higher. So thirdly, we have actual. What is this? Not the third, the fourth reason. So the fourth reason is the weakening. Eventually, we're going to see weakening dollar. Right now, dollar is um, just going to the moon. Now, reason is why is because the rest of the world is now hiding into dollar. Flight to quality, right? So what happens is also you can see that how as our or my expectation where I was you know showing basically where dollars like to go, and boom, it just shot up. But anyway, this was, I think I made a video about this before. But anyway, my point with that, and also it's not done. It's still gonna go up higher the way it looks. It's very strong because the whole world is kind of following the Fed model and jacking the interest rates because they also don't want to like lose um, their currency, right? Be too weak. They want to keep in like in step with the Fed and with the U.S. dollar. And so, but that's also causes their markets to crumble, like go down. And this is what's happening all across the world. And the dollar is the currency of the world, and so they find safety in dollar. So, bam, dollar goes up. But this is a function that I don't think it's going to be there in the long term. This is only for now because this acts as a safe haven. This is one of the dollar's reason and why we have a dollar regime, right? And so, but eventually though, you have to understand like when people price up, like uh, resources, their pricing is the dollar. If the dollar is you know um, more expensive, you can buy a lot more oil. So what's going to happen to oil? The price of oil will come down, right? And vice versa. If dollar goes down, oil will be more expensive because for every unit of dollar now, you're going to be buying less oil, right? And so right now, dollar is expensive. Or I wouldn't say expensive. I mean, hey, it could be more expensive tomorrow, but it's up. It's going up, Thus, oil is going down for now. But this scenario, which is causing a dollar to just move and just blow up to the blow its top off, it's not going to be you know prevalent forever, right? At some point, um, as soon as like this we put behind um, the kind of like the downtrend in all these other markets overseas and things find an equilibrium. When that happens, then the flight into dollar, will be lessened, and then we should find ourselves at the top, and then the opposite, it should go the opposite direction. The point being that this is not a permanent situation. At some point, dollar will top off. Sooner rather than later, we're going through some, I wouldn't say crises, but unusual events, unusual happenings, and once we kind of hit certain, you know, um, normalizing period, uh, this dollar strengthening should stop. In other words, that's another reason why oil long term should be again, getting it's start to move up again. So and yeah, and the and yeah, and the other thing is that also like to kind of go back, I kind of touched at the beginning, is that once in the future, in the coming future, once we put all these things behind, and let's say we go and everyone's like, back to speed again, and now all of a sudden they're gonna face oil at 80. We're starting with 80, 90, somewhere like that, right? Again, the level that we looked at on oil was um, here, right? Really, it's about 87 or so, and then okay, 84, right? And that's actually a pretty strong level. So anywhere between, let's say, 90, I said like 92 and a half. Again, I'm not a technical analysis Nazi, but it's right around that level. Let's just say for the sake of ease, it's $93. Okay, so 93, 87, and 80, 87 and a half roughly, and then 84, 87 or whatever, right? So um, okay, now, so we're, let's say in a year or two from now, um, everything, everyone's like kind of back to speed up again, and we're looking at oil at 85, 84, 87, 90, whatever, right? And all of a sudden, like if that's a new base, right? We had the again, that's a bullish case for oil. Um, and something else to look at is also you have to understand is that it's important to think about, when we think of oil and it's like $100, 120 or whatever, and with low capacity, people are not investing even with oil at 120, right? Why are we speaking of the, why is Biden going to like, Saudi Arabia and like, um, trying to say, basically he's saying, Uncle, can you give me some more oil? Um, well, the thing is, why are we not then investing that much into, into oil, um, even with oil at $100, right? And why did the EIA, and I forget the oil agency, not EIA, I forget the U.S. oil agency, said that basically, next year we're looking at maybe 3% capacity, increasing capacity. That's with $100 oil, right? Let's say oil goes to 60, 70, right? If if these people, if they're gonna be hard pressed to like increase production of oil by 3% at 100, $120, why would anyone expect, like why would anyone like make oil at $60 or $70, right? That makes no sense. You have to find a price level where it becomes more attractive for special small players to take risks. Because if some administration comes in and just says, well, you're screwed, we don't care about this oil shit, then they're kind of, they're screwed. So, in other words, that this is not conducive or a good environment to make long-term investments in oil, and oil is not something you just like a refinery process and all, making these infrastructure, like like pipelines. It is a complex undertaking, right? So it's not attractive at $100. Where will it be attractive? 150, 200, right? Again, that's a bullish case. And something, okay, yeah, the one last thing I'm going to show is that if you look at oil and look at, okay, let's look at the futures. Okay, so this is basically oil is in backwardation, which is to say that if you think of a certain price of a product, right? If you think of a product, X product, right? And if you warehouse it, you would think that in the future, like oil, it should be more expensive, is because you have to pay for that, for the expense for housing your product, right? On top of that, you're taking risk, pricing risk, because if you have something warehoused for 3 years and then you sell it, well, it could go up or it could go down, right? So what happens is that future supply and future contracts, so to speak, are all usually at a premium. But something what has happened with oil now, it's backwardation, and backwardation due to the fact that basically with all these things happening, this is spikes, and spike in prices takes some time to flatten out and enter into contango, which is where the usual relationship of a product is, where they kind of go like this, right? If you follow that the pointer, it's like this, this is how it looks. Exactly the opposite, right? It goes from bottom right, bottom left to top right, instead of where the price of oil is right now, top left, bottom right. So what does this mean? This means that in the future, July 20. Right now we're in uh, here. So there you go. Okay, so that's August. So August contract. Okay, September contract. Okay, you can see that this is essentially each of the contract month, the futures month. So what's happening is that in the future, let's say, what is when July 25th? Okay, July 2025, the market is at like $70 oil, right? Now, again, if you go back to what I was saying, is that if oil is at $100 and nobody's drilling for oil, nobody's investing into oil infrastructure, how the hell? Why would they invest into when it's like going to be $69? They won't, right? On top of the fact that the world is back to speed again, everyone's like, I don't know, making cars and driving and doing all kinds of stuff, right? The dollar is, kind of weaker again compared to where it's really strong now, right? This is not gonna, this is not likely, this is not good thing scenario for people to invest into oil, if or oil infrastructure, or to jack up the supply of oil when oil is at going to be $72, right? So again, that's another bullish reason. So basically, to go over, let's see. This is a little bit, kind of like a stream of thought type of deal. We have oil, um, change of, supply chain problems, geopolitical problems, which should fix up over a period of time. We should go back to like a pre-pandemic type of level of economic expansion all across the world. Geopolitical things. I mean, this is like a big happening, right? A nuclear power, on the borders of Russia, intervention in Ukraine. This is a huge deal. Again, likely to kind of, at least for the next 2 3 years, we can hope that it goes down. Oil is, at $100 is not attractive for companies to like invest and take that extra risk. Um, so we have quite a bit of headwind everywhere, like with oil. So headwind to like increasing supply and making these things more efficient, right? We have the backwardation problem here. Um, I mean, I may have missed some of the things that I've talked about. Um, yeah, the refinery problem. Again, you just can't like build a refinery like tomorrow, right? International problem, broken up, supplies, infrastructure is all, again, underinvested for a decade. Political problems, political biases against the industry. So all in all, this should be a uh, this is a bullish case in the long term for oil. So that's all. This is why I'm bullish on oil. Right now, though, yeah, oil is probably going to be headed down because, like I said in some other videos, that we are, and I kind of already said at the some of my videos that we are likely to be and probably are in a recession, and looks like finally the Fed is really agreeing with that, uh, and they're acting like that. Um, and with jacking up interest rates, that's going to be even more so. That you know, essentially we will be in a recession. Officially, we will say that we're in a recession. But to be honest with you, again, this has been the case, right? It's not shouldn't be a surprise to you, especially if you haven't listened to me. Um, so yeah, I mean, I guess I'll just let that be. Right now, everyone's kind of going through the same like downtrend in their markets and the economy. So momentarily, like oil should be kind of headed down, maybe in mid 80s, maybe 84, like I said before. Um, Hell, maybe even lower, but it's not likely. The probability of that happening, in my opinion, is lower. Um, and also, even if it goes, will it stay there? And that again is, in my opinion, I don't think it's likely to stay at that level. In the short term, though, there's quite a bit of good support at that 93 level. Then we're looking at whatever this thing is, 87 and a half, and then we have 84, 84, whatever, 84.52, 84, yeah, 83.90. Okay, and then then 81.52. That's not really strong level, to be honest. It's just one touch. It's a breakout to the upside, then one touch there. This is early in the year. Not a strong level, but it's in a bull market. Just look, it's in a bull market. Boom. Um, so yeah, I will leave it at that. I don't want to keep on going on because I think I kind of hit the main things I want to talk about. And so that's it. Good luck trading, and done for the day today. Scalp some in the morning, and yeah, let's see what the rest of the day brings. But adios. Hope to make some more of these type of videos in the future again.